Hi everyone and welcome into my US portfolio review, April 2021 edition. Now I've got to say this video is a little bit late, but there's been so much going on that I've just kind of prioritised them things going on. But yeah, we're going to look at my US stock market portfolio. I did my UK portfolio I think like last week, so you can go check my UK portfolio out. But today I'm going to show you all my US holdings that's currently in my portfolio. Before I get onto the video, I've got some bad news to talk about. So the bad news is that I'm not sure what's going on. Maybe it's a bit of my fault as well, but the like button has not been smashed the last two videos. It's definitely not been smashed. Like the views we've been getting are like 1,500-ish on the videos, but there's only like 60, 70, 80 likes on the videos. So that's only 10% of you guys that's watching this video are actually going and smashing the like button. So maybe it's my fault because I've not been saying it as much at the start of the video, but yeah, maybe we'll have to bring that back unless we can sort that out, because it's not looking good on the like button side of it at the moment. So let's try and get that sorted out. But yeah, I thought I'd mention that one. If you do want to join my Patreon, where I always post where I'm buying and selling these companies like the ones in this portfolio, make sure you join through the link in the description. And if you do want to start buying some shares, there's some links to the brokers in the description as well. But let's get on to my US stock market portfolio. As always guys, these are the stocks I'm currently holding. They don't include all the amazing profits that I've taken previously, so I thought I'd always mention that. But we'll get stuck into my portfolio. So we'll start with my DeGiro portfolio. This is probably the portfolio that I've had the longest. I only started using Trading 212 a while ago, but I also always recommend splitting at least between two brokers as well. I think it's very important that you do have two brokers, and DeGiro has always been the one that I've used the longest. I think I've been using DeGiro for like four or 5 years now, so I've had these guys for a while. I think they're a pretty good broker, but I use my Trading 212 for my ISA as well, and also there's some stocks that you can sometimes get on Trading 212 that you can't get on DeGiro as well, so it always works to your benefit, I guess, as well. But yeah, we'll go through this portfolio to start with. So yeah, you can with the series you can always track how the portfolio is going every month if you go back previously. But yeah, obviously it's been hit with a bit of a tech correction over the last month, so some things have changed, but we'll try to spend a minute on every stock anyway. So first of all, let's go from the top, which is Alibaba. Alibaba is coming up 26% right now. All these prices were taken from Monday, I believe, so just keep that in mind. But yeah, Alibaba's up 26%. A stock that I would be very happy to take probably an 80% profit on, hopefully within the next kind of maybe 1 year, 2 year. So yeah, that's where I'm at with Alibaba. I think it's a great company, definitely undervalued at these sort of prices. Did want to buy more, but it had a little bit of a jump earlier this week, so I probably won't do it at the moment. Next up, we've got Carnival. So Carnival is a stock that I've had since 2018. The stock was originally down like 80% peak COVID, but it started to come back. It's down only 22% now. So that's one that I'm just going to sell out when I get break even. I know a few people have always said, but you'll have a decent average now, and they'll only boom when the economy reopens. Trust me, when you've been down 80% on a position, obviously I didn't know the CV situation would happen, but when I'm down 80% on a position, I'm happy to get out break even, and that's what I'll do with that one. So yeah, Dropbox isn't doing too bad. It's up 33%. Steady away. For me, if I can get Dropbox and sell out at about $42, I would be very happy to take my profit on that one. So hopefully it will get there at some point soon. Yeah, we'll see how that exactly plays out for them. Facebook's had a very good month. It was only a month ago that I actually said, you know what? Facebook, I think it's about $250. I was like, Facebook at this sort of prices, it really interests me. And yeah, it's from there, it's actually gone up really well, and I should have really bought, but it's still doing pretty good. But yeah, that's currently up 75%. I own some more shares in my other portfolio as well, but I love Facebook, so yeah, I even that I'm up 75%, I still can't sell it because I still think Facebook and Instagram have so much upside. Gang, you can see Gang's getting quite a big position in this portfolio now, currently down 2% on this one, but I think when Q1 comes around, I think that'll be the game changer for Gang, and we only have to wait about a month for that. So yeah, I think when we do get a little bit more of a financial update into Gang in Q1 with Michigan launch, I don't think we'll see it down at this value for much longer. And I've been considering, like, it is a big position. Maybe if Gang pulls out a good Q1, maybe the stock goes up to $30, I might just take 10% off there. So I might trim that one at that point, but just because it's getting a bit of a big position. But yeah, I think that Q1 will be a game changer. So hopefully when we come to review this in a month's time, to be fair, only a month ago that stock was actually up quite a lot. So it's had a complete reverse. And same with the next one, Huya. For me, I'm a bit stuck on this one because I do really like it. And the more that it stays at this value and the more it does amazing financials, my price target's just going up and up and up. So yeah, I mean, I think right now, in my opinion, should be a $30 stock at least, and it's 17. So that's right now, and that's not considering like future growth, and if the merger happens, like we could be talking a $60, $80 stock. So yeah, with Huya, my kind of plan is that, see where it goes. It can't be too long until, I think it's just the merger that's holding it back. Once the merger's done, we'll say hello to probably $30, maybe $40. I'll probably take, 20% of my position there and let the rest go up to like $60 or $80 in that one. So yeah. Next up, JD.com. This has actually had the whole Chinese kind of stocks have had a bit of a bad month, but you guys that know, last month I believe JD.com was up like 340%. So that's had a massive pullback, but still doing very well at 261%. And to be fair, that's as well like JD. I actually, over the course of when I invested, I've actually taken half my profit in that position. So that used to be actually double the size of what it is right now. But I've took some profit on that one, gone to invest it in some new things, but I'm still keeping some shares there to keep running because I do think it's a great company. Microsoft up 117%. Same again. I once one that I've had in the portfolio for, I think that's been in the portfolio for maybe 3 or 4 years now. I think my average is like $100 on it. I'll just carry on. I've took some profit. I'm keeping that position there to let it run the long term. Pays me a dividend. We'll carry on growing. Them JD.com and Microsoft position are two positions that I just can't see myself touching at the moment at all. So yeah, same with the Pinterest position. I've sold about half of my Pinterest position, took like a 300% return on it, but this Pinterest position that I have here, I'm just leaving that one for now because I just have amazing averages on it, and I'll just let it run the long term now on them free. Those are like free positions that I just can't see myself selling anytime soon. Teledoc, obviously a new position this month. I've got a little segment here. I would like to, if it stays at these prices or goes down, then I'll like to double it, and then if I can, double it again. So yeah, it probably could come a little bit bigger, but I'm not anywhere near increasing just right now. But yeah, there's my Teledoc position that started coming in. Visa up 29%, just a big blue chip company to hold the portfolio down. Not too bad. We'll just return a little percentage every year. And then you got Walt Disney that's up 20%. Disney, great company. I bought this is the shares that I bought pre-pandemic, which obviously I was able to buy them a little bit cheaper, but it was in my trading 2 and 2 account. So yeah, same again, we'll just carry on holding them. And that's my DeGiro portfolio. So we'll go to my trading 2 and 2 portfolio that has a few more stocks in. Some that are in the other portfolio, like Alibaba, like Disney, like Facebook. And Visa. So there's 4 companies in here that's in the other portfolio as well. But yeah, we'll go through this one. So this is Alibaba. Same again, I'll probably look at selling these shares maybe around about 320 to 360ish. That's where I'd like to take the profit on them. Amazon currently up 5%. Just a steady away blue chip. Will hold that. It's got a lot of upside. Amazing profit growth. Then we've got Beyond Meat, which is currently flat. I think this company will do amazing in the next few years. So yeah, that makes up a decent chunk in my portfolio. I've got Boeing, which is up 77%. For me, I would like to sell out of Boeing probably 2 years down the line when the kind of CV recoveries has happened fully. The transport industry, all these plane companies recovered and they're putting orders back in. I think Boeing for me will someday get back up to like a $400 stock, which will probably mean near about a 3x return on that. So yeah, I'm probably still two years away from selling my Boeing shares at the moment, but still up 77%. Corsair taking up a little bit of a position there, which is currently up 3%. Another new position. You'll notice that these guys, there's a lot more newer positions in this one compared to the DeGiro one. You got DraftKings down 2%, but I love DraftKings. Like, you can see here DraftKings in modes, Shopify making 3 big chunks up in the portfolio. DraftKings I think will do amazing over the next few years. Definitely a long-term hold. eHang, which is my worst performer in the portfolio, which will be no surprise. That's, for me, eHang's just a company to buy, lock away, that's why I hardly talk about it on the channel, because I generally just don't want to think about it, and the price action I just don't let it bother me, because I'm literally buying that, holding it, see where it is in 5 years. If drones kick on, eHang will benefit huge because it's the number 1 player, and we will be laughing and thinking, oh, you should have bought more eHang. But yeah, it is down 41% at the moment, but yeah, I'm just literally lock it away and see where it's at in 5 years time. And here, small position in fintech acquisition. Those guys are going to be merging with eToro. Currently down 3% on this one. And yeah, this is just, I think eToro will do very well, especially with the year that we've had as well. I think they'll do some decent growth. So yeah, I'm kind of not looking for a huge return on that one, but I just think it will do quite well over the next few months. It's just a bit more of a spec play for me. I love having a bit of a spec play in there, and that's what eHang and fintech or eToro exactly do, and that's why they also make a very small position of the portfolio up. Then we've got a few more shares in Facebook, which are up 55%. Callaway Golf, which I think will do amazing over the next few years with its Top Golf merger, which is up 3%. We've got GNOG, which is making up a bigger position than what I ever planned it to make up, but I just look at the company and I'm like, it's just so cheap, and the company's doing absolutely amazing. So yeah, up 13% on that one. My opinion keeps changing on that one, because I'm like, I've got Gang and I've got DraftKings, and so I've got 3 companies in this here with obviously GNOG, but I look at them all and I'm like, they're all going to do amazing. So it's hard to pick a favourite out of them all. Obviously my favourite is DraftKings, and that's why it's my biggest position right now, but I love all 3. And then we've got InMode, not much to say about that. I made a video about it the other day, 145%. Still a lot of upside in that one. Still can't. I'm not even trimming it. I'm not. When I'm up 145%, I normally trim positions, but I'm not even trimming it. Planet 13 up 7% on that one. That's my MJ play. And yeah, the numbers they pulled out in March was absolutely amazing. And 5-year hold could easily be a company that brings in a 300% return for me, in my opinion. Shopify. I think maybe the insane growth days are behind this one, but I still think it's got amazing upside. Just a big blue chip company, 100 billion market cap company, hold the portfolio down. E-commerce will grow. Shops that use Shopify will grow. Yeah, it's just a steady away company like Amazon, really. I don't want to have. I want to have some developed companies as well as some like smaller market cap companies. You look at your Corsair, you look at your eHang FinTech, GNOG, even Callaway Golf, to be fair, InMode, Planet 13, they're all kind of like small, under 5 billion market cap companies. So I want a good mixture of some big players in here as well. So that, Amazon, Facebook, Shopify kind of holds everything down as well. Skills, which is down 7% right now. I'll probably do a full video on these guys at some point. I think I'll let you into a little secret. Obviously, this is some information that you would only know if you're on Patreon. But that position has got a bit bigger since this was taken, so I'll just let you into that little secret right there. Square, which is a very big yellow. It's very hard to read that. But yeah, that's up 21%. Bought that at $200 when we had the big tech correction. Love Square as a payment company. Tattoo Chef up 6%. I'd love to buy a bit more of this, but I'd like the price to drop a bit more. So yeah, I just don't want to average up that a little bit more. I know it's not huge, but yeah, I'd love to buy like in the $17 range if I could. Tesla up 12%, just holding that now for the long term. Turtle Beach up 41%. Turtle Beach is probably one that I'm probably going to exit in the next 12 months. Hopefully it'll be for 100+% return. But yeah, I think they'll do very well this year with the console cycle. So yeah, that's probably one that's exiting the portfolio in the next 12 months, I would say. So yeah, we'll see where that happens. And then a few more shares in Visa, which we talked about earlier, and those are my Walt Disney shares, up 65%, which I bought in the CV situation. But yeah, obviously that's a nice gain, and I'm sure that'll probably go to 100% return by the end of the year when we get a lot of the tourism recovery happen, I guess. So yeah, overall that's my portfolio. So yeah, I'm pretty happy with everything and how it's going. My only little thing that I would like to do now is probably trim the positions down. I probably have one or two too many positions now for my liking, but I look at them all and I love every company. I can justify every reason why I have every company. And apart from the GNOG, DraftKings and GNOG, I think it's a very well diversified portfolio. Like I said, my only thing is that I would like to trim my positions down slightly from the many that I've got. Maybe like 3 positions would be good. So yeah, in theory, that probably will end up being a fintech acquisition that will probably go within the next 12 months. Probably Turtle Beach probably go in the next 12 months. So that would probably drop the portfolio down by 2 positions. And then maybe we'll see where Alibaba is at. That could be one that kind of gets trimmed out maybe. And yeah, sometimes I think about Visa, but I'm not too sure because I've got Square now, you see. So I'm not sure on Visa, but yeah, I'd say that those would be the ones that I'm considering in the long term, probably taking out of the portfolio. As well as with Turtle Beach, I've got Corsair now as well, which I think covers more of the gaming industry and also doesn't rely that much on a console cycle as much as what Turtle Beach does. So yeah. It's a tough one, but that's where I'm probably at. But yeah, that's my portfolio anyway. I'm very happy with what it looks like, and I'm very happy with how it's going. There's not too many positions that are down, even after a big massive tech correction as well. There's only really eHang, eToro, and Skills in this portfolio, and even in the other portfolio, there's only really Huya and also Carnival. So Carnival will probably be one that goes in the next 12 months as well. So yeah, overall there's still the ones that are new, the ones that are in the first kind of 6 or 12 months, don't ever expect anything from them guys. If they do go up in the short term, amazing. But some of the new blood in here that is doing very well, and all my OG stocks, my ones that have been in here for longer than 12 months, that I would expect to start kicking on. They're all kicking on, which is great. InMode's nearly 12 month for now, up 145%. Pinterest up 200%. JD.com, Microsoft, so yeah, they're all doing very well. So Boeing's the Boeing position is actually coming up to a year. The Walt Disney position is nearly coming up to a year. So that's starting to kick on as well. And yeah, so my next ones that I would expect something to start kicking on is Huya and Gang, because I think they come a year, holding them in August time. So they've got a few more months yet to start kicking on, but I do want to start seeing Gang and Huya kick on in the next few months, because they would have been in the portfolio for over a year then. So hopefully they start kicking on. But everything else, my Beyond Meat, for example, that's kind of a newish one. I think that was November time, so that's still quite new. Corsair's 2 months, I guess. GNOG's like 2 months in. Planet 13 is maybe 4 months. So yeah, all the new blood, I no pressure on them to start performing yet, but the ones that I would want to start performing are doing. And then obviously you've got all the profit that we would have taken previously, half of the Pinterest position and stuff like that. Even on some of the other ones like iRobot that was like 100% return, Win Resorts that was 100% return. All of them are doing absolutely amazing as well for us. So yeah, very happy how everything's going, and hopefully you enjoy looking at the portfolio. And as always, every month we'll check in and see how it's going in the month of May. And hopefully we have some good gang earnings by then as well. But hope you enjoyed it anyway. Remember, smash the like button. Don't want to see that like button not smashed again. If you're new, subscribe. If you do want to join the Patreon, links in the description. If you do want to start buying some shares, links to some brokers in the description. And I will see you on the next video.